technical difficulties, but it looks like all that is cleared away. So yeah, what I was mentioning before is just super excited that the market is actually up on a Monday, that I get to come talk to you guys. Usually it's down, and usually it's down pretty substantially. So we get to chat a little bit about what's going on here in the market and it being up, which again, that's what we want to see. So, as always, my name is Michael Nauss. I'm a chartered market technician. I'm CEO of statsattrading.com, so you can come check me out there. But the basic idea and what we're going to do is we're going to take a look at the overall market, and we're going to figure out what's happening today, what we can think of. Uh, is this rally going to hold? Is this rally going to continue? I've got some thoughts. I've got some areas of interest that we'll take a look at. And then, as I see a lot of you doing already, send me your tickers. Let's try to find some ideas. I'll give you some my thoughts on whatever it is that you're looking at, and we'll take a look at it, everything from there, and just see, I'm looking for ideas as well. So I really appreciate coming here because sometimes you give me some really good ones. So, all right, let's start sharing the screen here, and there we are. Starting with the S&P 500. So first of all, massive day today. We got 2.05%. We're over 2% up on the Qs. We're almost 2% up on the SPY. Really, really interesting. If we pop into the heat map, you can see just a sea of green, right? There's really not much to be gained from this green when everything is up so much. Tesla up nearly 10% is just insane. So massive, massive bounce in the market. We knew it was coming, and I talked about this a lot. The question is, what's next, right? That's what we got to keep an eye on. Now, there's two thoughts here, right? This is why I want to be on the way down. I'm tried to be the calming voice. On the way back up, I'll try to be the calming voice as well. So we're bouncing, right? That's obvious. You don't need to be a CMT or a rocket surgeon to figure that out. So there's two ideas here. One is this just a giant bear flag? If it is, we're going to bounce. We're going to hit a level. I've got a level that I'll talk about that I think is interesting, and then we'll just fall apart. And that will be no good. That's the bear market scenario, because if that happens, look out below. Now, the other scenario is when we eventually have our next little pullback from this rally, do we find buyers at a higher price? If we find buyers at a higher price and then start to push higher, well, that's the bull case, right? It means that people are FOMOing in. And again, I'm the one that I always want to demystify technical analysis. I do a lot of statistics, right? I'm a quant by nature, and then a technician kind of secondary. So what I want to do a lot of is I want to just talk to you guys about what it is that technical analysis does. And all we're doing is we're trying to gauge where the buyers are, where the sellers are, and what the trend is. So that's why I'm laying out these two scenarios. One, if we just reverse and sell lower, well, that means that nobody was FOMOing into this rally. No one was waiting for a pullback in order to get involved. However, if we pull back a little bit, maybe we pull back into this area and then we're met with buyers and then we start to push higher again, well, that means there was a whole lot of people that were waiting for a dip. So that's the best case scenario. That's what I'm hoping for. But as a technician, right, we always got to stay impartial and just see what the market gives to us. So there's a couple things coming up right ahead here at 575.56. So let's say 575.50 on the SPY. One is this purple line that shows the low here in January. This was a pretty significant low. We had a nice bounce from there. You can see when we came back here, we actually tried to bounce off that level again. So that was a very important level when it came just the overall kind of psychology of the market. We bounced there once. We tried to bounce there again. So it meant that there was someone trying to defend those zones. Now, the other line in this orange line right here, this is just the anchored VWAP from all-time high. This is showing us where the average market participant from all-time highs, where is that person hanging out, right? And so think of it this way. What happened if you started buying the market at the worst possible price? You're new to the market and you started to get in right after the election and right into all-time highs here. Well, you just dollar cost average. Well, your average price is also sitting around 575.50, and that confluence of areas, those I think are super important. So you can see as we're pushing up to that zone, that's what I think we need to watch. Right? What happens when we get to this zone? If we just pop right through it, that's great. The reason this anchored VWAP from all-time high, the reason I'm interested as a quant, is that as a quant, I look at these zones and I do stats on them. So I have an actual on my website. You can see the statistics behind it. My trend following system looks for just this: a sell off below an anchored VWAP from all time high, and then a break back through. Now, with most trend following systems, it's not accurate insanely often. It's just not. But what it is that when you break and clear through these zones, often you you get a chance to make a really good trade. So that's what I'm looking for to happen here is if we end up breaking through and then popping through, what ends up happening there? Well, what's the zone that's happening at that area? So that's again, that's what I'm thinking there on the SPY. We're not there yet. We got to see what happens, right? We go into a 30-minute chart or something. We've just been grinding up. This has been a market that has just to the nth degree frustrated everyone who is trying to short, at least today anyway. And that's why I think we're getting this quote unquote everything rally, right? Is because we're just ripping the face off the bulls, right? We're just or the bears, we're just destroying them. Um, so, right, it just makes me think that yeah, we'll probably potentially grind up higher, and then again, we'll see what happens if and when we reach that zone. That's what I'm looking for. Not really much to talk about from all the different sectors and everything because everything's up today. But just to show that it's a little bit risk on, there's ARK, right? The biggest wealth destroyer of all time. That's rallying today, and I think a lot of that has to do with just Tesla. Sold off, and now we're up. I think it's like 25% off of this lows. Right? It still has a lot of recovery to do because it's still down huge from the highs, but that's like a 25% bounce. So everything is looking good, but we need to see some closes. And last little bit before we get into your picks, I'm just watching, and I talked about this on Friday when I was on with Jordan and Leah, which is always a good time. We had topping tail here and here and here. So showing there's a lot of selling in this area, this kind of 569, nice, this zone. If we end up, having a hard time getting through that particular zone, or if we fall back into it, that means that the selling that took place there isn't over. So, in a big summary, there are times to be very aggressive and there are times to wait and see. And I think this is one of those wait and see moments, and we'll figure out what happens next. I'm not super excited to get really aggressively long or to get really aggressively short. I am in that wait and see mode in the overall market. Good. Okay. I always like to start with that, and the reason for it is that everything should be in the context of that. And I think Nike here is going to be a prime example. I think it's one of those things where you have to look today at the overall market and you have to look at your portfolio and you have to say certain things like, okay, is my stuff not rallying? If my stuff is not rallying, then it's relatively weak, right? And one of the things that is the most studied in markets, and you can Google this and read all the studies you'd like, is relative strength and relative weakness. If your stock is not strong with the overall market, then it just means that there's a buy program going on right now that's buying pretty much everything today, just ripping everything up. If your stuff isn't involved in that, well, I'm sorry, but it is relatively weak. So when it comes to something like Nike, I you can take a shot on something like this. You certainly can, but you got to remember again the we're up 2% on the Qs today, and Nike's down. So everybody is buying everything, but they're not buying Nike. And that is what worries me. And that's what really scares me when it comes to some of these names is you would expect some sort of change, right? You would expect that this would at least get, even if it's a bad stock, you would hope it gets drifted up with the market. So again, I implore you, read the studies on relative strength. They're huge. They're everywhere. It's a huge place to go and look in the market because it's one of those that you can read. There's studies going back like 150 years on relative strength and how it affects the market. So when I look at this, I say they're buying everything. They're not buying Nike. I don't know why. I'm not a technician, but they're not buying Nike. For a trade, maybe you just lean on the lows of this candle if you like it. But if when they're rallying the rest of the world, if they can't rally the stock, I think that's a bit of it's a bit of a problem here. Um, MCFNF. Wow. Okay. Um, Generally speaking, yeah, this is on the pinks. I have a hard rule. I don't trade things on the pink sheets. Perf, just personally. The reason is because it's a really low bar to get added to the S&P 5, or not the S&P 500, to get added to the Nasdaq. And if you can't stay on the Nasdaq, I start to worry. So this is some energy company. The trend is down. It's down from $1 to 5 cents. This is a bad company that just can't stay on the Nasdaq. So I look at this, and I'm not even a fundamental analysis, but the trend is lower. The company's not very good. It's not something I want to play with personally. NBIS. So this is okay. So here's another. This is a good example as well, where this is participating in the market pop, right? Not hugely, and you don't want to look at it from like a percentage point of view. You more want to look at it just, pick a metric. So for me, it might just be, how high are we off the lows, or you pick a high and you say, okay, are we above or below that high? So this is one that's breaking out. I like the fact that there's a lot of support right here. You need to know what this company does, and it's in internet software and services. We can bring up this little panel right here that tells us a little more information about it. $6 billion market cap, so it's not nothing. Loses money, not what you want to do in this environment. Again, I'm no fundamental analysis, but when you get 5% for free on your money, you want to be in a company that's making money. But for me, if I were to trade this, the idea is pretty simple. You've got this kind of $25 share mark where it bounced back here, bounce again here, and now it's trying to bounce and break out here. If you end up getting through there, great. That's a trade you want to take. If you end up breaking and selling below, it's time to go. That's the way I look at something like that. MU. So here's my rant about semis. Uh, I think everybody is kind of fighting the last war when it comes to semiconductors. And what I mean by that is the idea of between fighting the last war is just to say there's less of semiconductors were the thing that got us out of the last bear market. The AI, all of that got us out of the last bear market. So a lot of people will end up chasing that dragon. And I equate this a lot to, people trying to find the bottom on, say, Zoom or Peloton, because Zoom or Peloton, these two names are basically the same when you look at the chart. These were the things that got us out of the pandemic sell-off. Were these kind of post-pandemic type plays, saying, hey, oh well, people are just going to buy this iPad strapped to a bicycle, and that's what they're going to do with their days now because they can't go anywhere else. Now, when the market recovers, it's usually something new that gets us out of it. And the idea behind that is that everything that's going to happen on semiconductors or SMH is probably baked into the market. So, yes, if the market moves higher, eventually semiconductors will get pulled out of this sideways chop, but they haven't gone anywhere for a year. So, we can get in a whole big macro speak about AI. I think that what we need to see from AI is somebody making money from it. And that's going to be a lot of small and mid cap stocks that say, oh, well, I didn't have to hire as many people. Or, I got to lay off some people, which is not good, but is something we'll probably hear about. The the beneficiaries of this again have to be something like that. They can't be just Nvidia, MU, all these companies again and again and again, just because eventually we need to see some trickle down. So the question you should always ask yourself is it priced in? And when it comes down to Nvidia and MU and all these themes that are covered so much, I think how much they're going to sell in semiconductors is already priced in. So we need to look for things that aren't priced in. We need to look for things that could potentially make a move kind of outside of what we expect. So whenever I see a chart like this, I don't see a bad company, and in fact, it pays a dividend. So if you're sitting there and not doing anything, you're making something. However, I look at it as potentially dead money. So not a bad trade, but just a trade that may not go anywhere. And for me and for everyone in this room, we don't have unlimited we don't have unlimited capital. So the question not so much is, right, do I think this is going to be a bad trade? I just look at it inside this range and say it's probably not going to break out of either end of this range for a very long time. So is my money better put somewhere else? Right. And then, right, you set an alert up here and you set an alert down there if you really like MU. And if it gets down there and you want to buy it because that's support, great. And, for it to get to new all time highs, it's going to have to break out of this area. So while you're in that zone, while you're hanging out in that area, right, you're saying, oh, kind of cleans it up a bit. You're saying, there's nothing to do here. So let me just have my money into something else. Or if I'm the kind of guy who just wants to sit and collect that dividend, you certainly can do that. But again, the way I look at that is that's just a range bound name. Someone just says yo, so I'll say yo back. NU as opposed to MU. There you go. Right back to back. So NU is a regional bank. Okay, so this isn't a finance company at all, but it's one of those where, again, it's existing in this range. Now, if we zoom in for a shorter term kind of look, we have this gap right here. I always I like these, but most people like those. So that's why every time you see them, they're like that. But again, there's a lot of people out there that think gap fills, that trade gap fills, and they do very successfully, very, very successfully trading gap fills. The idea behind that is just there's no trading action in here. So there's no emotions. And what, again, technicians are trying to do is they're trying to find out where are buyers, where are sellers based off past price action, and what's the trend. That's essentially what we're focused on. And there's no buyers or sellers that existed in this zone because we just gapped through it. So earnings was bad, but it started to recover. And now this is kind of like a mini cup and handle, right? If you're someone who you go out on like a 30-minute chart, you can kind of draw a little cup and handle. So now we're talking time frames. Because from the long-term chart, if you zoom out, it's a great looking company. It's been in a nice uptrend. Right now, it's stuck inside of a little bit of a range. But if you zoom in a bit, and if you're a more short term player, or you just want to take a short term trade based off of a potential long term move, you have this cup and handle kind of look. So I think, if you believe that this is a cup and handle and you believe in this kind of pattern, then the beauty of technical patterns, I'll be the first one to say, they don't predict anything with a insane amount of certainty. But the beauty of what they do is they give you very clear entries and exits, and then sometimes targets. So even if it's only accurate half of the time, as much as a coin flip, it helps people a lot because it says, okay, this is you enter here, you exit here, and anything that gives you a stop loss, I think, is an amazing thing because that's what we're all looking for is how do we end up being tight here. So NU, just nice cup. And then we have this handle. So if we break out of this handle, again, the breakout would be pretty much right here, but you could say $12 to be even. And then your stop's like 11.25. So you're risking 75 cents. So then you just got to ask yourself the question of, do I think there's a decent probability that I could make a buck 50? Because if you're risking 75 cents to make a buck 50 and you're accurate anywhere near a half of or a third or whatever of a time, great. That's a good trade. So again, that's how us quants think about things. Is just what's the probability? And you can see the little cup and handle drawn here. So I like it. It's a nice look. And financials, if you go to the XLF, financials have been great. Financials have actually been leaders of this particular pop. KRE, I think, is your regional banks. They haven't been doing as well, but they've still been doing okay. AMD. So AMD, I'm going to give a lot of the same catalyst as MU, except the fact that this one's actually participating with this rally. So you can see I drew this trend line right here. And then I think this was because I was on here before and someone asked about AMD. I don't hold this one, but I think this is kind of what I said, how I would trade it, is that a break of a downtrend, you want to get involved, and then your stop goes right here at 94, 95. Again, relatively weak, and I don't like trading things with massive relative weakness to their competitors. Obviously, AMD has been weak compared to MU that we saw is just range bound. It's been weak compared to NVIDIA, and even recently it's been weak compared to Intel, which is hard. However, it's breaking out a little bit now. I will say today in particular feels very short covering rally-ish. And again, I said on the quant, and I don't have any data to back that up at all. It just feels like potentially there was a lot of sellers that were caught off guard, and they have to, get involved in. They got to cover, right? So that's one of those things that I'm okay with, right? I'm okay with these guys having short covering because I'm a long only swing trader. I'll short when it comes to day trading and futures and things like that. But I'm a long only swing trader just because I don't short very well. And so yeah, feels very short covering. This is an overall weaker semiconductor name. However, I think you got a pretty clear area here at 95. As long as it holds that, I think you're okay to take a little shot. TTD. I have futures, but that's Dutch natural gas. That must not be it. The trade desk. That makes a little more sense. So anytime I see something like this, take that. I do that breathe in because this is a great looking stock that just broke recently. Right. This is. I understand why someone would have been interested with this into earnings. I totally get that because it's a nice strong uptrend. Right down here is 43, $44 and went all the way up to 140. So a nice strong and solid trend, but you had this earnings report and then it just got kind of obliterated then and has just been selling ever since. So again, not a fundamental analyst, but I don't need to be. All I need to know is that they missed something and then said something that people really don't like. So for me, I look at it when I see something like this, I look at bag holders, and there's just bag holders everywhere in this name. There's people who were in this at 120 that just saw their wealth got completely cut in half. So in any rally, I worry that those people are then going to be offloading those shares. So as the thing rises, you have people who, and again, we've all done this. We know we shouldn't. If you're a day trader, if you're a swing trader, whatever, we've all said, "Oh man, I'm so down on this position. I'm just going to wait for it to get back to even. I'm going to sell." Right? We know that that's wrong. We know that that's not something that we should do. We should just be playing the trades as we see them. However, I see that that's what I kind of see here. So one tool you can do is you can slap an anchored VWAP right before, and you know that the average person, say you were averaging down, you were buying down every dip, your average price is like $70. So until it can get and reclaim that with some strength, I just wouldn't be interested because again, I just look at this and I say sorry to the people who got involved. Whatever the company said or did on earnings has been no fun. So, it's like sorry. Um, I see a couple, but I do see Peloton. I know we just talked about that, so we can go back. Peloton is interesting. So first of all, anytime you see this, you kind of got to get that completely out of your head, right? I don't think I don't think I'm going out on a limb to say Peloton will likely never, I don't want to say never, let's say for the next 10 years, won't be a $150 stock again. However, that doesn't mean you can't get some good trades because I don't think anyone's ever really expecting Peloton to go and be, 10x what it was before. I don't think that's the move at all. What I think is that people are um, looking to make sure that can it get to like 14? Well, that's a double from here. So we've got this interesting kind of cup and handle look. Uh, uh, Someone that I follow who's really good in the retail space is Jeff Mackey, who's spent his whole life kind of studying retail stocks, and he likes it from a fundamental point of view. I'm not going to question him. He knows more than I do. But we do have this potential little cup and handle right here. So I think it's an okay trade. I just want to make sure that whoever's looking at Peloton realizes that there's probably little to no chance that Peloton ever gets back to right 120 a share. I think what you're looking for more in a Peloton with this kind of cup and handle look is, hey, does it break out through here at $8 would be the kind of cup and handle entry, about 850 with a stop at 5. That's a wide stop, so you're gonna have to trade it a little bit delicately. But right, does it do that, and does it get to, I don't know, $14? This It's a double. Right? If you want more than a double with your trading, you might be a little greedy. So yeah, interesting looking trade. So I kind of like it. And, we can talk about stage analysis. I won't bore everyone with that stuff, but basically just means that as this thing is selling, you're getting people who were long and made a bunch of money out. You're getting people who are shorting, making money, those momentum traders. And then generally speaking, you get to this area right here. And there's a lot of stocks that are sitting around this zone. I think like Roblox and Rivian and things like that are around here. And the idea is that this is where value investors start to get involved. Like the buddy I was talking about, Jeff Mackey, who studies these things, right? He looks at it and he says, okay, well, this is something that was definitely not worth 120, but doesn't think it's going to. He's like, hey, if it was going to go bankrupt, it probably would have. So there's some fair value there that's not way up here and not down there. So, I don't think Peloton will again be 100 and whatever company, but if you break out of this little zone, maybe you get to 14, which is just where we were in 2023. If you get there, great, good for you. But again, I just want to make sure people are not anchored to this high. So many people I hear, I see say stuff like that. Well, oh, if we just get back to whatever, we'll be good. And it's like, no, um, it won't likely get back there. Again, I'm mortal. Anything can happen. But that's a decent looking look. So KTOS. This is a defense stock, if I do believe. Yeah, defense and security. So this is looking interesting, right? It had a dip like everything else, but started to recover way before the rest of the market. I have this shaded area. And FYI, just if you're someone who follows my work or follows technical analysis, this is how most technicians draw support and resistance zones. There's an old technical analysis saying that I absolutely love, and it's you draw your lines with a crayon, not a pencil. Essentially, just meaning big, thick zones, right? If someone says, "Oh, there's resistance at $10," they don't mean right. You buy it at 10.01. They mean somewhere around $10 was an area that people sold it before. So when I look at something like this, I say, and there's a big level here around, right? You can call it 35 ish down to 30. So 30 to 35. Big level here, nice rounded bottom. This is that stage analysis that I talked about before. We have a sell off, and then somewhere around this, $5 to $10, you start to have value investors that's saying, this is the price that I'm going to look at to accumulate this because I think this is a fair value based off whatever fundamental stuff I do. And then, right, up we go. So I think it's a pretty clear play. If you're above that $35 area and you like it, I think you can take a shot. If you're below that, then I think it's time to go. Probably stop loss would go below this swing low at 25. So you're risking $10 a share. So your question is, do you think you can make $20 a share? Again, it should always be, it doesn't have to be 2 to 1. But what I'm trying to explain there is that we're all playing a game of probabilities, right? Nobody knows anything for sure. If anyone tells me they know something in the market, I run immediately because that person is either insane or lying or trying to sell me something. So it's a game of probabilities. So if you're buying it at 30, 35 and you're risking to 25, then you're saying, say I'm better than average when it comes to my accuracy, and I'm 60% correct. If you ever think you're 80, 90% correct, again, there's something going on, or you've just been lucky. So you look at it and you look at it kind of just like statistical odds. You say, okay, if I'm right half of the time, but if I'm right half of the time and I make 2,000 and I'm risking 1,000, well, that's a good game. That's a game you want to play over and over again, knowing that there'll be loss streaks. So you got to make sure that you've got a bankroll to cover that. So that's when I say, hey, 2 to 1 risk reward. Maybe it's more, right? Maybe you're really on to something and you think this thing can go up to, again, probably not $2,000 a share. But, say you think this thing can go up to like 100. That's a 3x from there. Well, then, if you're risking 10 to make 70, then you don't need to be accurate very often in order for that math to really work out for you. Again, make sure you're asking any questions. I can look at Forex, I can look at cryptocurrencies, whatever it is that you want to see. For me, the idea is it's all a chart and it's all high, low, open, close. So I can do my statistics behind it too, right? So I can test things. KLUR. This is a industrial machinery manufacturer. There you go. Earnings coming up, so be careful, right? You've got a dollar stock that is a $300 million stock. So this is a tiny, tiny, tiny small company. And the fact that it has earnings tomorrow and this company has never made money ever, just be very careful. You just have a binary event. I don't know if it's tomorrow. What's the exact date? So I'm not messing with you. Thursday, the 27th. So just be careful. Nice looking little chart, right? Had a massive push from 20 or 30 cents to $5. That's a great play if you got in on that. But now it's just pulling back, and this looks like a more orderly, controlled pullback. But when it comes to really, really small companies that have wildly inconsistent earnings, um, buying those right before earnings or even holding them into earnings is just a massive risk. Now, a massive risk can lead to a massive gain. You just need to understand that you are taking that massive risk. So you need to be totally fine with the fact that uh, if you're wrong, you can get clocked. So it's all about sizing and sizing yourself accordingly. Because if you're right and this thing goes back to $5, it's a 5x. But I just look at these things and I say, hey, this has been this bad price for a reason. It's a dollar stock. If it's ever a dollar stock, it's a dollar stock for a reason. Now, if you're just making the bet that it won't be a dollar stock soon, again, I don't think there's anything at all in the world wrong with that. Um, I just don't think it's right. It's a bet that you want to make going into earnings. And if you do, you just need to know that you shouldn't be shocked if the day after earnings it's a 30-cent stock, and you shouldn't be shocked if it's a $5 stock. And if right, those are the kind of YOLOs you want to take, go right ahead. Just kind of make sure you do that small. BBAI is probably having a wicked day. Oh, that's actually kind of disappointing. So Big Bear AI, I had this area highlighted. Anytime you see these thin lines, that means this was actually part of my algorithm. I don't know if I actually ended up buying it when it hit this price or not. I don't think so. I think it was like on this day or something. Um, but yeah, just a dramatic, dramatic pullback into this zone. Yeah, it's holding support, but you know, again, for me, the trade on these kind of things are pretty simple. If you want to do a little support bet, right? You're buying it at 337. If you're putting a stop at below this low at 275, so you're risking 50 cents a share. And if you believe for whatever reason this is going to continue to move higher, then great. It's getting a nice uplift, and yes, it's up 13% today. But again, let me take a look here. Like, yeah, Fartcoin's up 20%, right? So everything is ripping. The SPY's up 1.5% on the day, right? So everything is moving pretty significantly higher. So, right, we just need to understand that everything is ripping and that we don't want to get super involved in that, right? We don't want to get super hyped, or FOMO, I guess is the word I'm looking for, where everything is up today. So if you're looking at things and you're like, hey, my portfolio is up, then you shouldn't get too excited. And again, more importantly, if anything in your portfolio is down today, that's, I think, something you have to take a real hard think about and just say why, and is it something that I'm having a bad time on. So TTD Peloton Light Chain AI. That sounds like a crypto. Light Chain AI wrapped in Ether on Uniswap. Okay, I don't know what this is. Let's try one more time, because that looks like a scam. Um, yeah, I don't know what any of these are, but I'd be very worried about them, because that looks like a scam in the making. Someone says, good talk. I appreciate that. Again, make sure you guys are asking your questions. If not, we're going to circle back to the market. And then if there's no more questions, we'll have to call it a little early. But Someone's saying Alpha. I think this is another crypto too. Alpha USD. Yeah, not so much. So this is one that's, again, it's, you got to look at it, right? You got to say that the um someone asking about oil. Okay. Do I not have the right chat? Maybe I should refresh here. Um like, let's just look at Bitcoin, right? Bitcoin is up 2.3%, and it's been up over the last 2 days. And you're using Bitcoin as a, yeah, see right here. Oh, we switched spots. Okay. Sorry, I'm not talking to myself. I swear there's a producer on the other side of this. Oh, there we go. More, more stuff. Cool. Yeah. So yeah, I look at it, and when I look at something like that Alpha uh, meme coin or whatever it is, it's drastically underperforming the market, and it's, more importantly, it's underperforming Farcoin, which, full disclosure, I have to, full disclosure, I own some, which is just embarrassing to say. But yeah, so if you're crypt, just like I said, if you own a stock and your stock's not participating in this rally, I would say the same thing in the crypto world. I mean, let's look at Ethereum, and Ethereum's been the dog of the crypto space for how long? Like, look at this awful chart. It's just getting beat up. Like, Ethereum's been dead forever, and it's still up 3% today. Solana, Solana chart looks amazing, by the way. Full disclosure, again, I'm in some Solana. Just looks, this 125-ish area has been huge. We broke out of that. We're looking really, really strong here. Um, yeah, up 7% on the day. So then I would look at the same kind of caveat that I gave for the same caveat I gave in the stock market. What was it, Nike? I'm trying to remember. Yeah. Yeah, if I'm Nike's down 1%, so I'm really kind of thinking, saying, geez, why? Right? And then not saying sell it. I'm obviously not giving any investment advice here, but I'm saying you have to notice that the market of stocks looks like this. Like, this is the stock market. It wouldn't shock me to see a, like Coca-Cola down today, some of these kind of names that are defensive. But look at that. That's all up really, really big. So then I look at something like that, and if I own anything today that's down, and I'm telling you this is my plan, so I'm going to go through my portfolio today, and anything that's down, I'm most likely killing. Like, I'm just getting rid of it, and trying to, or having a big think, and if there's a reason that it is down, and I still like it for whatever reason, it's fine. But you're gonna have to give me a hard case about why a stock that's down today helps out, right? And that's part of my quantitative thinking. Again, you can look up all the studies on relative strength. There's just so many different studies talking about relative strength versus the market, relative strength versus different indices. You can just continue to look through and say, oh yes, this is something that um, is a persistent market edge, and that's what we're looking for, right? Uh, Someone's saying, yeah, quants. Oh, I love, again, my trading changed. Even my discretionary trading got so much better when I started to become quantitative about things. And that's all I do now, right? Is I 99% of what I'm going to do is quant stuff. Where at the end of the week, I run all my statistics. They say here is 30 stocks to watch if they get to XYZ prices. Then I sit here on my butt and I wait for the alerts to come in, and then I take the trades. And other than that, and I'm telling you, it's a better way to live. MLGO. First of all, again, anytime you see this line on a chart, that means this was a SPAC. Most SPACs are awful. Like, it's just, they had to delist the SPAC ETF because most SPACs went down so much. And if you see that around $2,000, that means they went through a lot of reverse splits. So it means that this is a awful company. They just couldn't stay listed on the Nasdaq. Just a bad overall company. Now, if we zoom in, yeah, it's getting some pop today. Let's read whatever the news. MLGO to issue new shares to settle debt. Okay. So they're paying off debt. That's a good thing. Right? The company's not ever made a dime, I bet. Um, so yeah, I guess it's a good thing to pay off your debts. But again, the way I look at this is there's no I won't be the guy to tell you that technical analysis always works. Right? Again, it's very black pilling in a way to be a quant because I can test things. Right? If someone says, "Oh, you buy stocks when they hit the 200-day moving average," I can go, "Okay," and I could tell you in 30 minutes whether or not that's a good idea. Um, so when I see stocks that are in downtrends, I just know the odds of them continuing to be in downtrends is pretty high. Is this the point where MLGO has turned its business model around and starts to move higher? Sure. I bet you if you go and you look at the float, I don't know if you can do this. Float? No, you can only do the short volume. Um, I bet you the floats increased dramatically over time because they've issued more shares. Now, it's only a $100 million company. So could it be a $200 million company? Maybe. I have no idea what they do. They're technology, they're in packaged software. So they do some sort of software as a service. Now, technically, I think it's a momentum. You look at some stocks and you say these stocks are slow trend hires, right? And that's good. Those are great to play. Then there's momentum names, and momentum names were like the quantum computers. I think is a perfect. Still think all of these are scams and probably going to zero, but these were momentum names. When the momentum was hot, you could have just bought anywhere and held for a couple days and have done great. And then the momentum dies, right? This gap right here is when the Nvidia CEO said it's going to take a while for any of these things to make any money if they end up building something that exists at all. So if that's the case, you have that sell off, right? So you have to know that the momentum has died. Now, has the momentum kicked back up here? Well, if we can get and hold over 12, maybe, and then maybe you see a rally to 16 or a rally to 20. But you have to just trade those two things differently, right? There are good quality stocks that go up over time, and they could be stocks around a theme like robotics or space or whatever it is. And then there's pure speculative momentum names. And I'm not saying one is good and one is bad. I'm just saying you have to trade these differently, right? So when it comes to something like an MLGO, I look at this as a momentum name. If the momentum is going to continue over 10, maybe there's a trade to be made there. Uh, it's not a trade I would make, but again, you could do that, and then you could try to ride this momentum wave, and maybe it will continue to some time. If it starts to push higher, great. You got to know that the company is diluting shareholders to pay off debt, and that's why it's up. And again, that's why I'm not a fundamental guy. To me, it seems bad to dilute your shareholders, and it seems bad that you can't pay off your debt unless you sell more shares to retail. But hey, whatever. So, momentum stock, if you're going to trade it, just understand if it can go from $4 to 10, it can go from 10 to 4 just as easy. So have a plan on exits. The only thing I say about momentum stuff, I think it was uh, George Soros had a famous quote of, "When I see a bubble, I jump headlong in," right? Because the only people that get hurt by bubbles are people without game plans. They don't have a plan. So they just, I'm going to get into this bubble because it's a bubble. I'm going to run right in. And then the bubble's going to pop and I'm going to be left holding the bag. Again, most people, uh, intelligent traders, they'll understand that something's a bubble and they'll just trail a stop up and eventually the bubble pops and they get hit and they just, hope they get hit longer. It's kind of like the meme stock, right? You just don't want to be the last guy out. So, MRCY. Mercury Systems is a aerospace and defense. I love the defense sector right now, just because it's an ITA. Yeah, aerospace and defense. ITA is the ETF. And this is, look at this ETF. So this is aerospace and defense. Again, full disclosure, I own some of this. These are the kind of things that my old man arse likes to buy, right? Big, strong continuation, right? If we get a breakout from here, this could be a nice trend continuation. I know there's a sub 50-50 chance that this works out, but I'm up 3% on the month. I'm up 7% in 3 months. So if we end up getting through this area, right, that's just a nice little basing pattern that we could continue. No, no idea what is no idea about politics or anything. I am Canadian, but it seems like this administration may want to spend a little bit more on defense and aerospace, so we can take a look at things like that. I know Boeing is in this sector, and Boeing is starting to actually recover as long as they don't blow up any planes or blow the doors off any planes in the next little bit. This looks okay. If we do LMT, this has been selling off for some time, but some of these names could look good. And again, ITA is the defense sector. So if we break out of this, I like the look of that. Again, you can just read the studies about buying things that are making new all-time highs, generally a good thing. Buying things making new all-time lows, generally speaking, a bad thing. So MRCY, obviously underperforming this overall sector, and generally speaking, I think it's a better idea to try to be in the leaders when it comes to these different names. So we have a nice tight base here. So I think your game plan on this would be pretty easy, right? If you think that this flag or this base is going to resolve higher, then great, you can pick some up. I would keep an eye on that ITA, that defense sector, because if the defense sector is moving higher, it's most of the gains of most stocks are based off the sector itself, right? If you are long something in the defense sector and the whole defense sector is selling, the odds are you're not going to make money. Again, most of the returns come from the sector. What you're doing is you're generally getting more leverage by playing a single instrument that's moving higher as opposed to like a basket of securities that's moving higher. So, yeah, so more risk, but more return trading single names. So, earnings was obviously good. Some right, and we gapped up, then we came in, filled that gap, and now we're just basing higher. So it's a nice little short-term pattern. I like the look of it. I like the sector, and I like that you know when you're wrong. That's the most important thing, right? None of us really know anything. We're all just making educated bets, so we just need to know when we're wrong here, right? PM. So I'm not. I know what you're looking at, like a topping pattern here. I look at this as just a nice, strong trend continuation. We have to compare everything to the market, right? I talk about relative strength, relative weakness a lot. This has been the market recently, but Philip Morris has actually been holding. And to be honest, I think Philip Morris is going to be the weed play. That's just my thinking behind it. Is that if there's ever sort of weed legalization, I don't think the all of these beaten up stocks are going to rip to new highs or anything like that. What I think will happen is some companies like this that have cash, they have the ability to grow things, they have the ability to distribute things, right? They have all of that in place. They'll go and they'll pick something up from that space and they'll just buy a weed company that has already existing IP and already existing packaging and clients and all of that, and then just go from there. That's again, that's what I think anyway. Uh, so that's interesting. That again, that's my idea anyway. I could be wrong. Again, I'm not some sort of god, so definitely could be wrong. But that's just my bet. And again, I wouldn't. I think this has been rallying a bit because uh, it's a game. It's a defensive play, right? It's one of those that people may not buy Teslas and they might not buy fancy cars, but if you're addicted to smokes, you're going to buy your smokes. So it's kind of like Coca-Cola or McDonald's, in which they generally do well in worrisome markets just because people are going to continue to go there anyway. So it's a considered a safe harbor to put their money in. But again, I think this is interesting from a technical point of view. Right, it's just a base to me until proven otherwise. there's a natural inclination of people to try to chase things or try to have things go down because they went up, right? What goes up must come down. Generally, not the way it works in markets. So I just look at it like this: big, strong push up, and now it's consolidating and getting tight, right? So, saying they're looking at puts on PM, you know where you're wrong anyway, right? Again, I will never I will never be the guy to say, "Hey, I know something," because again, if you ever find a trader that does run, uh, I just am one that I bet on the direction of the underlying trend more often than not. The underlying trend of this one is higher, so I personally wouldn't bet lower on it. However, you know where you're wrong, right? If you buy the puts and we start breaking 160, you're probably wrong, right? It's probably going to make new highs, and you go. So I don't hate the trade. The whole gap fill thing, again, I always, you'll hear me when I say it, I always quote other people. Some point, I need to do some studying, a study on it. Again, we have the data. I can go back and test how often do gaps get filled, how quickly do gaps get filled, does this gap fill thing actually mean anything? I like the idea behind it, in which, again, there's no trading that has existed here, so there's nobody like emotionally tied to any of the prices here, so sometimes they just slip right through them. But again, as a quant, it's like if I can't put my finger on it and say, yes, there's edge here, then it becomes, very problematic for me to potentially trade, because if there's no edge, then there's nothing for me to do, right? Oil. We can do CL. Just do the futures. So this is the area I've got marked out on oil. It seems like, and we know oil is a manipulated asset, right? It's OPEX can decide the price of oil anytime they want, and it looks like around $65 to $69 is where they're saying, okay, if we get to that price, let's reduce production a little bit to push it up, and then we get a little bit higher, let's increase production to push it back down. So to me, I look at it as it totally makes sense if you wanted to take a shot, around the $66, right? We're at 69 right now, but we're in this $66 a share or a barrel area. So it makes a fine place to take a shot, because you know where you're wrong, right? If you end up breaking that zone, it ends up drifting back up to the 80s. That makes sense as well. If it gets back up to the 80s, I think it's one of those that when you're looking at something like commodity, you also have to look at the battle that people are going to have against that commodity. So inflation is going to be a huge fight there, right? Inflation is one of those things where if oil starts to tick higher, we know that the current government is going to say drill more, right? Create more oil. So in that case, to try to keep down inflation, you're kind of fighting the government there. So one more, and then we'll call it a day here. We'll look at BSX, Boston Scientific. I keep thinking those are the Boston Dynamics guys, the creepy robots that are going to kill us all, but I think these are different company. It's nice. It's a nice chart. You look at something like this, and it's not making you rich overnight, but it's just nice, strong, right? These down the bottom here, just every time it's a red arrow, they missed earnings in some respect, and every time it's a green arrow, they beat earnings. So a lot more beating of earnings than missing of earnings, which I think is just a good thing. As someone who's not a fundamental analyst, I just want them to grow earnings at an unexpected rate, and that's caused this price to just really, really spike higher. And right now we've just got this sideways consolidation. So a break of this consolidation to the upside, I think that's great. Yeah, it's just a nice look. Now, when it comes to a lot of these things like healthcare and technology, obviously watch the XLV. The XLV has been chopping sideways, so that's good. The reason that's good is because this is relatively strong to the XLV, and that's what you want to see. That's a nice looking sector, and that's a nice looking stock. So again, I appreciate all of you guys for coming out. I like doing this. I have a list of stocks that I'm interested in now because of you guys. Again, it's like you're doing my homework for me. Thank you very much for coming by. And personally, I will see you guys on Friday.